because it's so dramatic. Silver's rollover today, as was the run-up that we've seen.
Yeah, well, I think it is a good choice for Fed share, and the move in gold and silver today, it's an interruption. So clearly the market is rethinking the implications of a new Fed chair. I think the timing was a surprise because it all kind of came out last night. And I think it's very healthy, actually, for silver and gold to be seeing some profit taking, because that was a juggernaut trade that I think in many ways was like a vortex sucking risk appetite from everything else into those two trades.
You think those two trades are done? I mean, you talk almost as if you think this is merely a pause that might refresh. The velocity of the move out of silver today is somewhat startling to look at. The market's not supposed to act that way.
Yeah.
I don't care what happened back in 1980 or whatever. It's not supposed to do this.
That's right. I think there is some fundamental reasons for silver to be rising, and gold is, of course, now should hold a place in someone's portfolio. But those were parabolic moves. I think you're right, that could look like blow-off tops similar to 79.80. We won't know with the fullness of time.
Okay. Professor, what do you make of those trades? We often talk so heavily about stocks, and we will, but these are the moves that have grabbed everyone's attention. Gold, silver, dollar, probably find a few other things too.
I agree with Tom. When you have so many momentum players that join gold and silver, just playing that trend, this is exactly the type of reaction you get, that parabolic move down, and then any little piece of news, a little selling, and maybe just the confidence, hey, Warsha's not going to debase the currency. That's enough to trigger this sort of reaction. This could be the high for quite a while, but I still think that, I agree that, having a sliver of gold or some gold in your portfolio is probably still a good idea. I mean,
We're going to get a drawdown. You've even used the words bear market, and then we're going to get a nice ramp into year end that you think can get us to 7,700 by the end of the year on the S&P. Explain.
Well, it has been a good start, and as you know, many people kind of follow what markets do in January because that sets the tone for the year, and we're on a positive start, plus the first week was positive. It's a good omen. So I actually think our 7,700 is probably low. I think the S&P could maybe even do 8,000. We're not sure. But we also know that there's a few things that need to be digested. 3 years of good gains, a lot of good news is priced in. There could be a policy shock. There's been a lot more, and maybe part of it is the White House picking winners and losers in front of the midterms. And the third is that we have a new Fed that the market is going to test. And I mean, today's a taste of it, right? That we have an announcement of it, and the market's already picking winners and losers among commodities or assets or dollar. So I think those can contribute to a drawdown. Last year, it was a policy shock that took us down 20%.
I'd like to know his opinion. Is there more competition, more doubts about adoption, more fear that there could be a technological breakthrough that might penetrate some of the moats of these great stocks?
Do you want to answer that? Because you're pretty bullish, these names.
Yeah. Well, one, all of them are linked to the importance of AI, and as the tentacles in AI grows, they all benefit. I think a lot of the progress in AI is invisible at the moment. That's why markets are kind of questioning things like what Microsoft reported. But I think that those invisible gains then lead to productivity. But it's at the same breath, this year, I think the market is broadening because we've seen a lot of other trades work besides the Mag 7, and it's not a bad thing. I mean, that to me is not late cycle. A broadening of the market is as a mid-cycle phenomenon, right? Because basic materials are doing well, small caps are doing well, a lot of industrials and healthcare. So that's a sign of a broader market, which is the other 493.
It's a sign, I guess, Professor, of what some would describe as a run-it-hot economy. That is a run-it-hot stock market, and all those cyclical areas are the ones that would do well. Now, normally after we would get a few of the mega cap earnings reports, I would ask you, well, what did we learn about the mega cap stocks this week? But I don't think we learned anything, because I think the group shouldn't be discussed anymore as a group. And we learned whatever we did about Microsoft, and we learned something different about Meta, and thus the stocks reacted differently.
I've never seen, the Mag 7 react so differently. They usually just go together, and we think of them as a group. But continuing on what Tom said, I mean, really only 15 to 20% of firms have really even begun to use the potential of AI.
Again, this was a week where you had the Federal Reserve, you had big earnings. Everything was setting up for maybe a push through massive resistance to new all-time highs. That did not happen. We get one more chance next week. If we do not, this market has a 10% plus correction written all over it. And today we saw over 10% just in silver alone. Silver dropping 28% on the day, peak to trough, yesterday's high to today's low, 40% drop. Let's dive right in. Here's your silver candle. This is your daily chart, folks. Incredible. Look at that decline. And this really, folks, is again, this reminds us all to not chase. When you chase, sure, you could miss out on some upside, but ultimately, do you want to get caught in a one-day collapse of 30, 40% on an asset? I don't think so. Yesterday, going as high as $121 and change. Today, it bottomed at $75, below $75, before snapping back to about 84. Is the selling over? I don't think so, but we might get a 1 or 2 day bounce. Technically speaking, silver, take a look. You are into a zone of support. So you can see right here, see how price was grinding up, then had a big green, red, big red, and choppy before it broke out again. That's where you found support. That's how technical analysis works. And so in the short term, yes, I think there could be a bounce next week. Do I think the selling is over on silver? I don't think so, guys. So again, we'll continue to monitor and see how things go. A couple other things to note. If the selling does break this area, silver is going to go back and test the $54 level. $54 is a key level, not only because of this pivot top and this pivot top. You can see the little cup and handle pattern right there before the breakout. But on a bigger time frame, what do we know? We know that when you go back towards 1979 to 2011, basically that's right in the same zone as retracing to those former major pivots. Now, I don't know if it's going to go there, but my point is, again, as a technician, my job is to ultimately look and say, okay, if this level breaks, where is your next major support? And that's at $54 per ounce. Now, we'll go into gold in just a minute, but let's talk about one of the other big headlines today. Jerome Powell is going to be out in May, and President Trump nominated Kevin Warsh to replace him as Federal Reserve Chairman. Now, the reason why this was a big deal is because he is much more hawkish than you would have anticipated. He's not a stooge. He's not someone historically who would just do whatever the president wants. That's really important for the independence of the Fed and for the U.S. financial system. So the dollar today did gain, even though the S&P and the NASDAQ declined, but the dollar strengthened, which was very important because what did we know about the dollar, guys? We knew the dollar was into major support, and if it breaks this, it is not a good scenario for the USD, right? So here's your weekly chart of the DXY, the dollar against a basket of currencies, and we can very clearly see that since 2008, right here, it's been kind of holding this uptrend, right? Holding this uptrend. Well, what did we just get to this week on the weekly? We went into that zone and it's bounced off of it. Now, it might break down in a week, in a month, in a year. We don't know. But right now, the dollar got saved. And I have to say, I think that the Fed nomination of Kevin Warsh was a very instrumental part in, at least in the short term, keeping the stability of the US dollar. Now, one thing I was surprised about, and we haven't even gotten to the S&P yet. We'll get there. We'll get to stocks individually. But one of the things I was very surprised at is that yields did not decline. Because the idea is that if you get someone in the Fed and the Fed remains independent, and you get someone who's legit in the Federal Reserve chair spot, well, then other countries might be willing to buy the U.S. debt. You would say, okay, well, more demand for treasuries, potentially, maybe yields go lower. It didn't happen. So this is another thing that has me leaning towards, and you can see it right here, yields on the 10-year, they weren't up much, but we still maintained the breakout, right? So in previous videos or game plans and weekly wrap-ups, we've talked about the breakout, the retrace, and then really this is what should end up happening. And today would have been a perfect time for price or the yield to fall back at least into this technical support, and it did not do that. So what does that tell us? Let's think about this. To me, it tells me that there's another factor at work. And that factor is inflation bubbling up, which makes a lot of sense. If you think about it, how many of us have looked at the price of copper? How many of us have gone to the store lately? Prices continue to go up, and they've started to go up faster with silver, with platinum, palladium, copper, aluminum, nickel prices all soaring. That's all going to get passed into the inflation from PPI into CPI. And even oil is up 15% in January. Inflation, inflation, inflation. And so what the 10-year yield is telling me, with rates staying higher even on this news, it's telling me that ultimately expect, or at least the bond market expects, inflation to go up in the second quarter, third quarter, fourth quarter of 2026. And that's going to make it nearly impossible for the new Fed chair to cut rates, even if the economy weakens a little bit. Very interesting stuff. All right, back to the S&P 500. Here we go, guys. So the S&P 500, this is the problem. We broke down below this white trend line. And you had every chance this week, including on Wednesday, when we opened right into that white trend line, to push above. And the markets could not. That is not a good sign, guys. Again, part of that was Microsoft earnings and even Apple earnings. I mean, even Apple, right? Apple had earnings. It basically ended flat on the day. A lot of these earnings, unless it's specifically AI driven, are falling flat. And the market is only going to wait around so long to try to recapture this area. And again, for those of you that are new, here's your big yellow parallel, which has marked every major high and low in the stock market since the COVID low in 2020. All right, then we say, okay, well, we tagged it here, and then we haven't tagged it since. Then we have this upsloping trend line since April. We, again, look at the beauty of this, right? So it hits it, hits it, hits it, hits it, and breaks, and then retraces. In technical analysis, this is the most likely outcome. And you can see it's trying already. Now, the reason I say this market has one more chance next week is because next week, number one, we'll get the jobs report. And number two, we still have Amazon and Alphabet that will report earnings, including AMD and some other secondary tier companies. If for some reason these earnings can be fantastic and maybe the jobs report is just right, maybe this market can break through this level. But odds, probabilities are not on the side of that happening. We hammered it again and again and again and again and broke. And then look, right back to that level, and it's gotten rejected. That's TA for you, Technical Analysis 101. Classic breaking support now becomes resistance. Now, again, same sort of deal. Let's see what happens next week on the markets. Maybe, just maybe, it can be saved. I'm not optimistic, but obviously price can always prove me wrong. Now, some other worrying signals. So number one, NVIDIA hasn't behaved well. Broadcom's hasn't behaved well. Oracle's a disaster, right? I mean, even some of these others, the one group that's really been doing well has been the memory chip stocks like SanDisk and WDC. But today, SanDisk gapped up on earnings, a massive gap up, and it reversed. And at one point went negative. It did end up closing green, but these type of candles are topping candles. Not good at all. All right. So again, we'll see where this goes. But my guess is you have a top on SanDisk. WDC got crushed down over 10% on the day. And these memory stock players all across the board did not perform well. Even Micron, look at this nasty reversal engulfing candle on Micron. This to me was kind of the last bastion, the last zone of support, or that was keeping the markets excited, this memory super cycle. Remember, memory super cycle. I've heard it a million times. I heard about how this time in silver was different. It was different. There's not enough. There's too much paper silver. There's not enough actual silver to meet demand. All this, the narratives that people spread because they want their investment to play out. That's why I look at the charts, because everything you hear is all about narrative driven. The charts are really the only unbiased thing. Chart is a chart. It has no ulterior motive. It just is what it is. We follow the charts. At least we're more likely to be successful. All right. Now, a few other stocks to go over here. Apple, we talked about that. Next week, Amazon reports. I'm not in love with this pattern formation on Apple. It almost looks like a head and shoulders pattern, doesn't it? It's a little wonky, no doubt, but you can kind of see it right here, right? And so that is a little bit concerning. Granted, the neckline has to break. But again, just keep your eyes on this chart on Amazon next week when they report earnings. And then Alphabet right here, folks. Alphabet's an interesting one because it's really the only one of the mega caps. I mean, think about the mega cap $1 trillion stocks. There are a dime a dozen now, it seems. There's so many of them. But the point is that most of them are off their all-time highs. The only one that isn't is Alphabet. So this is going to be a really important point or report for Alphabet. Expectations are extremely high because price has gone up so much. And my only concern is that you're getting towards the head point of a wedge pattern, right? So essentially you have this one. You even have another one right here. Look at this one right here. There's even another wedge inside of that. And these type of upsloping wedge patterns tend to break down more often than they break up. And so again, just be very careful. If we don't get good numbers from Alphabet, listen, even if we do, like Apple actually had good numbers. Meta had good numbers. It didn't save the market this week, right? And so I worry that even good numbers, you're still getting selling pressure here. And that's something we saw this week.